If you're trading stocks, crypto, or Forex, this message is specifically for you. Maybe you're just starting out, or perhaps you've been in the game for a while but feel stuck. Are you tired of the constant roller coaster of wins and losses? Do you feel like you're always chasing the market, reacting instead of planning? You might be trading based on emotion. That means clicking buy or sell because of a gut feeling, a hunch, or maybe even panic. It's letting fear, greed, or the fear of missing out dictate your decisions. These powerful emotions can completely override logic. The results of emotional trading are almost always inconsistent. You might have a few lucky wins, but they're often followed by devastating losses. This leads to chasing those losses, trying to make back what you lost in a rush. It also causes you to exit winning trades too early out of fear of losing profits. And perhaps worst of all, it makes you hold on to losing positions for far too long, hoping they'll turn around. You are definitely not alone if this sounds familiar. Many traders go through this exact struggle, but there is a way out of this emotional trap. In this video, we're going to dive deep into trading psychology and emotional discipline. I'm going to equip you with the tools and strategies you need. The goal is to ditch that emotional roller coaster for good. It's time to start trading with a clear head and a winning strategy. Stick with me until the end, and I'll give you a clear roadmap. This roadmap will guide you towards consistent, profitable trading. Let's get to the heart of the issue. The core problem isn't necessarily the market itself. It's what's happening inside your brain when you're making trading decisions. Specifically, it's the emotional side of your brain hijacking the logical side. When you react emotionally to market movements, you're bypassing rational thought. This emotional reaction is a recipe for disaster in the fast-paced world of trading. Your instincts, which might serve you well in other areas of life, can be detrimental here. They often trigger fight-or-flight responses that are inappropriate for managing capital. The critical need is to tame these powerful emotions. You must learn to recognize them and prevent them from controlling your actions. The ultimate goal is simple but challenging. You need to let logic and a well-defined strategy take the wheel, not your fleeting feelings. This shift in control is fundamental to becoming a successful trader. It moves you from being a victim of market volatility to a disciplined participant. It requires conscious effort and practice, but the rewards in terms of consistency and profitability are immense. So, how do we start taking control? The absolute foundation is building a rock-solid trading plan. This isn't just a document you write down once and forget. Think of it as your blueprint for success in the markets. Your trading plan outlines everything you need to know before you even place a trade. It defines your goals, your risk tolerance, and your specific entry and exit criteria. It also details your position sizing rules. It's essentially your GPS for navigating the complex trading landscape. Without a plan, you're simply wandering aimlessly. You're making decisions on the fly, which is exactly when emotions creep in and take over. A plan provides structure and removes guesswork. It tells you what to do in various market conditions, long before you feel the pressure of a live trade. Let's break down the essential elements that must be in your trading plan. First, you need clear entry and exit criteria. Define the specific conditions that must be met for you to enter a trade. Equally important, define the conditions for exiting, whether in profit or loss. Next is risk management. This is non-negotiable. You must define how much capital you are willing to risk on any single trade. This leads directly into position sizing. Based on your defined risk per trade and the distance to your stop loss, calculate exactly how many shares, contracts, or units you will trade. Implementing stop loss orders is crucial. These are automated orders that close your position if the market moves against you by a predetermined amount. They protect your capital. Finally, include take-profit orders. These orders automatically close your position when it reaches your target profit level, helping you lock in gains without emotion. Having these elements clearly defined in your plan means you don't have to think or feel your way through a trade. You just execute the plan. This systematic approach is the first major step in removing emotional decision-making. It provides a framework for rational action. Your plan should be written down and easily accessible. Review it regularly, especially after a series of trades. Treat your trading plan like the rules of a game you are determined to win. Deviating from it is like breaking your own rules. Building this plan takes time and effort up front, but the time saved and capital preserved by avoiding emotional mistakes is invaluable. It forces you to think critically about your approach before money is on the line. This proactive thinking is key to long-term success. Remember, the plan is your guide. It's your defense against the impulsive urges that can ruin your account. Make it detailed, make it realistic, and commit to following it. This commitment is the bridge between having a plan and actually trading strategically. It's not enough to just have the plan. You must trust it and execute it consistently. This builds confidence over time. A well-defined plan reduces uncertainty. Reduced uncertainty leads to less fear and less impulsive behavior. It allows you to measure your performance against a clear standard. This makes analyzing your results much more objective. So, if you don't have a trading plan, stop everything else and create one. It is the single most important step you can take right now. It's the foundation upon which all other aspects of successful, non-emotional trading are built. Don't trade another dollar without one. Once you have your trading plan in place, the next crucial step is tackling the emotional beast itself. This is where the real magic happens in transforming your trading. It's about recognizing when emotions are trying to take over and developing strategies to manage them effectively. You can't eliminate emotions entirely, but you can control how you react to them. The first strategy is self-awareness. You need to identify your personal emotional triggers. What situations make you feel panic? What makes you feel greedy? Is it seeing a big, fast move you missed? Is it being in a losing trade? Is it seeing others brag about their wins? Understand what sets you off. Mindfulness is another powerful tool. This means being present in the moment, noticing your thoughts and feelings without judgment. When you feel fear or greed rising, simply observe it. Acknowledge the emotion without immediately acting on it. This creates space between the feeling and the action. Breathing exercises can be incredibly effective. When you feel overwhelmed or stressed by market movements, take a few slow, deep breaths. This simple act can calm your nervous system and help you regain composure. It gives you a moment to reconnect with your logical brain. Journaling is essential for emotional mastery. Don't just track your trades, track your emotions surrounding those trades. Write down how you felt before, during, and after each trade. Note what triggered those feelings and how you responded. Reviewing your journal helps you identify patterns in your emotional reactions. You can see which situations lead to poor decisions and learn to avoid them or manage them better. Finally, know when to walk away. If you feel overwhelmed, frustrated, or overly emotional, step away from the charts. Take a break, go for a walk, do something else entirely. Return to trading only when you feel calm and centered. Overtrading or revenge trading often happens when you're emotionally charged. Giving yourself space prevents these costly mistakes. Mastering your emotions is an ongoing process. It requires practice and patience with yourself. Don't expect to become a stoic trading machine overnight. There will be slip-ups, but the key is to learn from them. By actively working on self-awareness and using these strategies, you build emotional resilience. This resilience is vital for navigating the ups and downs of the market. It allows you to stick to your plan even when your emotions are screaming at you to do something else. This is the mark of a disciplined trader. Emotional control isn't about suppressing feelings. It's about acknowledging them and choosing not to let them dictate your trading actions. It's about training your brain to prioritize logic and strategy over impulsive emotional responses. This takes conscious effort every single day. But as you get better at it, you'll notice a significant difference in your trading results and your overall stress levels. Trading becomes less of a battle and more of a process. So, make emotional mastery a core part of your trading development. It's just as important as understanding charts or indicators. Your mindset is your most valuable asset in trading. Protect it and train it well. With a solid plan and strategies for managing emotions, the final element is building discipline and consistency. This is the glue that holds everything together. Discipline is the ability to stick to your plan, day in and day out, even when it's difficult. It's executing your strategy without deviation, regardless of how you feel or what the market is doing in the short term. Consistency is the result of applying that discipline repeatedly over time. It's not about being perfect. It's about being persistent in following your process. How do you build this crucial discipline? First, set realistic goals for yourself. Don't expect to get rich overnight or win every single trade. Understand that trading involves losses. They are part of the game. Realistic expectations reduce emotional pressure. Regularly review your trades. Analyze both your wins and your losses objectively. Did you follow your plan? What went right? What went wrong? This analysis isn't about self-criticism. It's about learning and improving. Use your trading journal extensively for this. Track your progress over time. Monitor your performance metrics, like your win rate, average win, average loss, and overall profitability. Seeing your progress, even small improvements, can be incredibly motivating. Celebrate your successes no matter how minor they seem. Learn from your mistakes. Every loss is a learning opportunity if you approach it correctly. Don't dwell on losses or beat yourself up. Instead, analyze what happened, identify the lesson, and move on. Use that knowledge to refine your plan or improve your emotional management. Most importantly, be patient. Building discipline and achieving consistent profitability takes time and effort. There will be setbacks. Don't give up when things get tough. Trading is a skill that is developed over time through practice, learning, and perseverance. Discipline means taking trades only when your plan says to, even if you feel impatient. It means cutting losses when your stop loss is hit, even if you hope the market will turn around. It means taking profits at your target, even if you feel greedy and think it could go higher. It's about following your rules, not your impulses. Consistency comes from this disciplined execution. It's doing the same right things repeatedly, allowing the probabilities defined in your strategy to play out over a series of trades. It's not about hitting home runs every time. It's about consistently hitting singles and doubles according to your plan. Building discipline is like building a muscle. It requires consistent effort and gets stronger with practice. Start with the small steps. Commit to following your plan for just one trading session. Then extend it to a day, a week, and so on. Hold yourself accountable. Review your journal to see if you stuck to your rules. Be honest with yourself. Remember, the market doesn't care about your feelings. It rewards those who are disciplined and strategic. By focusing on discipline and consistency, you shift your focus from the unpredictable outcome of a single trade to the reliable execution of your process. This is a fundamental shift in mindset. It's about trusting your edge, which is defined by your plan and your ability to execute it consistently. This trust reduces anxiety and builds confidence. So, make discipline your trading partner. Let consistency be your long-term goal. These two elements are non-negotiable for sustainable success. They are the bridge between having knowledge and achieving results. They are what separate consistently profitable traders from those stuck on the emotional roller coaster. So there you have it, the roadmap to escaping emotional trading and achieving real results. It involves three key pillars: building a structured trading plan, mastering your emotions, and developing unwavering discipline and consistency. It's about trading smarter, not harder. It's about replacing impulsive reactions with deliberate, strategic actions. You have the power to change your trading results. It starts with making a commitment to yourself and to your trading future. Start by creating or refining your trading plan today. Begin practicing self-awareness and emotional management techniques. Work on building that crucial discipline, one trade at a time. It won't always be easy, but it will be worth it. You can move from being a victim of market volatility to a confident, strategic trader. The path is clear. If this video gave you that wake-up call you needed, please hit that like button. It helps spread this important message to other traders.